With Tesla stock going up hundreds of percent over the past few months, we're left with the looming question. Is Tesla stock overvalued? Is it a bubble? Or is this the next Amazon? In order to evaluate whether Tesla stock is overvalued, we're going to use valuation ratios such as PE and PS. However, we don't have enough data about Tesla's earnings, and the company hasn't reached a point where they're going to turn on the switch for maximized profitability. So it would not be accurate for us to use the price to earnings ratio in this analysis. As a result, we're left with the price to sales ratio, a common metric used for growth stocks like Amazon and Tesla. At the time that I'm recording this video, Tesla stock has a price to sales ratio of 6.76. On the other hand, Amazon stock has a price to sales ratio of 3.72. Already, off the bat, Tesla stock has a higher price to sales ratio, but Tesla is expected to grow faster than Amazon. So it's not a fair comparison. In 2 years, Tesla will likely be in a similar situation to Amazon's valuation right now. With the ramp up of the Model Y in 2020, it's fairly reasonable to expect high revenue growth rates for Tesla. Elon Musk has once said that the Model Y will sell more vehicles than the Model 3, S, and X combined. However, given the fact that Musk does put out ambitious estimates, we're going to estimate a revenue growth rate of 35%. This is reasonable, in fact a little conservative, as not only is the Model Y going to be released, but also possibly the Roadster and Semi, which should start selling by the end of 2020. In order to calculate the price to sales ratio, we need to take the total number of shares outstanding, multiply it by the stock price, and then divide this result by the total revenue. Last year's revenue for Tesla was $24.5 billion. We can multiply this by 1.35 to get an estimate for Tesla's revenue in 2020. By doing this, we get an estimate of $33.07 billion. There are currently 184.4 million shares outstanding. Using the price to sales formula, we end up with an estimate for Tesla's price to sales ratio by the end of 2020 of 5.02. This is still relatively high, but we're looking at a longer horizon, many years past 2020. In 2021, it is fair to expect growth of 35% again due to the ramp up of the Roadster, Semi, and Cybertruck. Multiplying the revenue by 1.35 again and solving for the price to sales ratio gets us a PS ratio of 3.72. This number should sound familiar. This is exactly the same as Amazon's current price to sales ratio. This allows us to conclude that at the current price for Tesla stock, 2 years of 35% growth year over year are already priced in if you assume that Amazon's current valuation is fair for Tesla in 2 years. However, assuming that Amazon's valuation is fair for Tesla in 2 years is a big assumption. In my opinion, Amazon's current valuation will be fair for Tesla in 3 to 4 years, when Tesla's growth starts to slow down. In the year of 2022, Tesla is looking to expand into a cheaper vehicle, and with the further ramp up of the Cybertruck and expansion in Tesla Solar, along with Tesla's batteries, this will lead to, in my opinion, revenue growth of at least 35%. But for the sake of having conservative estimates, we're going to stick to 35% revenue growth. And note that we have already seen 500,000 reservations of the Cybertruck, which signals lots of demand for the pickup truck. If we calculate the price to sales ratio for Tesla stock with 35% revenue growth, we'll get a price to sales ratio of 2.75, assuming the stock price is still $900. In order to reach the same valuation of Amazon stock, the stock price would have to be $1,215. If we go even further along term, assuming 35% revenue growth throughout the rollout of the autonomous driving network in 2023 and the ramp up of an affordable Tesla, then we reach a price to sales ratio of 2.04 for the stock price of $900. At this point, a stock price of $900 would be a steal. So we need to convert to Amazon stock's valuation, and using that, we obtain a stock price of $1,640. These are conservative estimates, but it's important to be conservative when dealing with estimates such as these. This demonstrates that if you want to buy Tesla stock because you believe in the 1 year or 2 year vision, you should not buy the stock. It's overvalued. But if you believe in Tesla's long-term vision multiple years out, Tesla's current share price could seem fairly valued to you if you have a bullish vision on Tesla's future. I left a link down below for you to use this spreadsheet so you guys can use the price to sales ratio to estimate your fair value in Tesla, as calculating the fair value of Tesla stock varies between different opinions. In order to utilize this spreadsheet, go to File on the top left and press Make a Copy. Make your own copy and then change the values of the estimated growth. I formulated it so that the growth rate can change year over year, And using that, you can calculate your fair value on Tesla based off of Amazon's valuation. So go check out that spreadsheet in the link below to calculate your fair value on Tesla. If you guys enjoyed this video, please hit that like button and subscribe, and I hope to see you in another video.